Natural gas futures forged further ahead early Wednesday, supported by bargain buying and expectations for a bullish government inventory print and mild impacts from remnants of former Hurricane Debby provided the catalyst for a relief rally. Gas prices surged on Tuesday, halting a four-day decline, boosted by reduced production levels due to maintenance that has curtailed output by 2.5 billion cubic feet per day. National demand is expected to ease to moderate levels in the coming days due to weather systems over the Midwest, Plains, and eastern U.S. However, demand will return to strong levels in the 8 to 15-day period as above-normal temperatures spread across most of the country. Meanwhile, major U.S. nat gas producers are preparing to further curtail production in the second half of 2024 after prices sank nearly 40% over the past 2 months. EQT, one of the top gas producers in the U.S., has embedded around 90 billion cubic feet equivalent of strategic curtailments this fall, which the company will carry out if the market remains depressed. Chesapeake Energy, which will be the largest U.S. gas producer after it completes its merger with Southwestern Energy, plans to defer some well completions while the gas market is weak, biding its time until supply and demand imbalance is correct, the company said last month in its second quarter earnings report. Chesapeake's decision to defer well completions is strategic, allowing the company to wait for the anticipated increase in LNG demand, which is expected to boost prices. Houston, Texas-based Apache is also set to curtail a further 90 million cubic feet per day of gas in the third quarter. Apache curtailed 78 million cubic feet per day of gas production in the second quarter in response to pricing extremes in the Permian Basin, the company said in its second quarter earnings report. Rivals Antero Resources and EGO Resources are opting to do the same, they said in earnings reports. According to the latest Energy Outlook report, U.S. nat gas output is projected to average around 103.3 billion cubic feet per day this year. This is a slight decrease from the 103.8 billion cubic feet per day produced last year and a slight downgrade from the July forecast of 103.5 billion. Traders now attempting to establish a support base above $2, which is the last significant support level before the next key threshold at $1.90. In light of the current supply glut, a substantial and sustained rise in LNG demand or a significant production reduction will be essential to catalyze a recovery rally and drive prices upwards. Today's initial upside target is a minor pivot point at $2.06, which is followed by a stronger resistance level at $2.10. If nat gas manages to settle back above the $2.10 resistance level, it will move toward the next resistance at $2.20. Please like, subscribe, and comment to support the channel. See you in the next one.